Hi everyone, this is Anders Ibsen from Windermere Professional Partners, managing broker of Anders Ibsen Homes, here with my colleague Ashley Mills, the lead team agent from the team. How you doing, Ashley?
I'm good, thank you very much.
Awesome. So the market has shifted. It's like someone flipped a switch when those interest rates changed due to 40-year high inflation. With a new normal of 5 to 6% mortgage interest rates, there's just been a dramatic change in the market. Based on what you've seen out in the field, Ashley, with our team's buyers, how do you think that's looked for people?
It seems scary to begin with. Most people see these higher interest rates and it immediately translates to...
The sky is falling.
Exactly.
Yeah.
Oh my gosh, what is my monthly payment going to look like? But in reality, it's actually incredibly helpful for buyers right now.
How's that?
Well, what it means is you now have room to breathe. You can go look at a house and you can go home and think about it. You can ask for things when you're writing an offer that you wouldn't have been able to do just months prior.
Yeah, it's dramatically different. And sellers, on a different tack, but related, sellers are having kind of a rude awakening where no, you can't just be owed a bidding war the first weekend you put your house on the market. You actually have to work for it. And what I coach my sellers, which is just part and parcel of what Ashley was talking about, is that you're really just waiting for that one good offer at this point. And the cost of failure for overpricing your house, for marketing incorrectly, is just dramatically higher. And on the buying side, that's what we take advantage of, is that when we see those listings that might be on a little bit longer, that just means concessions, that means a good outcome, that means more room to breathe and negotiate for our buyers. So in your experience, when you've been able to be more aggressive, what does that look like?
So first of all, it's an inspection contingency. When I used to walk through with buyers, the first thing that they thought of was, oh my gosh, everyone else is going to waive their inspection. And the first thing that Anders and I coach our clients on is we never want to waive. You want to do your due diligence. You want to go into the property with your eyes wide open. And now we have the opportunity to do so. And just because everyone else is doing the same thing as well. So having an inspection contingency is probably the biggest relief that we can offer our buyers.
That's absolutely true. And we can do our due diligence and we can use our due diligence to negotiate properly. Whereas before, if I could, I guess, summarize the difference between the old market, and it sounds so funny saying that because the old market is only maybe 3-4 months ago. So the spring 2022 market versus the summer 2022 market, it's the difference between what does it take to win this house? How do I beat all these other people who also want it? Versus I'm the only person on the table who's offered, and what's the most I can extract? What's the most I can get out of the situation? How aggressive are we allowed to be? And that's a phenomenal difference here. And it really bears out when you look at the market statistics themselves. It's really stark if you look at those contrasts. So check this out. It was only 3 months ago when your typical Pierce County house that was $400,000 or under had a 4-to-1 ratio of under contract pending listings versus active listings, meaning that your average seller in that price range had a 437% chance of selling a house. That was the land of 20 offers per each listing. Fast forward to now, July 2022, and that same price range, the entry-level hot range of $400,000 or under, and the chance of selling has shrunk over 300%. Now you only have a 126% chance of selling the same house, meaning that you might see a bidding war, but chances are you have just as much of a chance of just being the only offer on the table for the seller to consider, which is dramatically, in my opinion, an improvement for first-time buyers. Whereas before, in April of 2022, there was a 439% ratio between pending listings and active listings. Now it's just 81%, meaning that sellers are no longer even guaranteed to sell in the median price range here in Pierce County. And that means that if you're looking for a house that's anywhere over $400,000 in Pierce County, you have a very high chance of being the only offer that seller is going to see, meaning that the room to negotiate is substantially higher than it was even a few months ago. So that's some pretty wild stuff that's happening in the marketplace. It's just like someone flipped a switch just over the last few months. So Ashley, based on your experience and working with the people out in the field that we represent, what would you say are the biggest changes that you're seeing for buyers in today's market now versus the past few months ago?
Sure. So As I had mentioned, one of the biggest changes right now is inspections. So we're able to ask for inspection contingencies, but following that is we're able to use what's called a 35R, which is our inspection response. So just a few months ago, as I had mentioned, we usually don't recommend that you waive your inspection. But a lot of the times what we were doing to try and compete with people who had waived is we would do what's called an information-only inspection. So we would go and do an inspection, but we wouldn't ask for any concessions or repairs. Now we're able to use that inspection response, which is called the 35R, and we're able to ask for additional inspections to be done, such as having a plumber come out, an electrician, a roofer. And then after we get those bids, we're able to ask the seller to maybe cover some of these big ticket items. So if the roof is nearing age, we're able to ask the seller to replace the roof or to have HVAC come and service the furnace, just small things like that, which 3 months ago we weren't able to do. So that's been a huge relief for buyers, and it's been incredibly helpful, especially for some of these buyers who may not have the funds to replace the roof themselves.
And besides physical fixes to the house, like getting a new roof or repairing the roof or fixing the leaking plumbing, you can also just drop the price, right? Or you can get more money in the buyer's pocket.
Absolutely. So price reductions with the inspection response has been more common. We've also been able to ask for closing costs, which has been incredibly helpful. We have a lot of buyers who qualify for these loans, but they might not have the money in savings to pay for the closing costs, which on average is about 2% of the purchase price. So we're able to ask the seller to cover those costs for our buyers in lieu of making these repairs.
And generally that can be more strategic than, unless it's a really large purchase price concession. Generally, like if the choice is between getting $5,000 docked from the purchase price or $5,000 credited to you for your closing costs, if you're using a loan, generally you want those closing costs credited anytime, because that's the difference between less money directly out of your pocket at the time of closing, which you can then put into your house for some repairs, whereas $5,000 off of a loan means that it's not like you're paying $5,000 less, you're financing $5,000 less over 30 years, which means your monthly payment drops by like $5. So exactly. It's all about being strategic and working with people who understand those nuances. So inspections are a really huge component of buyer strategy, and the ability to ask for those things is so different now than it was even a few months ago. What would you say are some other key differences?
Price in general. So a few months ago when we would go look at a property, my clients immediately would be budgeting about $50,000 over what the house was listed at, just because we would see 10 plus offers on a property at once. So the list price was just a suggestion at that point. So right now, when we see a house listed at, let's say $400,000, my clients can go into the house expecting to pay around that much, because as you had just mentioned, you may be the only offer on the table. So coming in at list or having these escalation clauses just for safety, but maybe not having to use them, has been incredibly...
And how does an escalation clause work exactly?
Yeah, so with an escalation clause, what we're saying is we're going to go in at X price. So let's say the house is listed at $400,000. We're going to go in at $400,000, but we're willing to come up to blank. So let's say $500,000. So your escalation clause only comes into play if there's another offer on the table. That seller has to prove to you that there is that other offer, and we are saying we will beat that price by whatever our increment amount is.
Couple grand or something.
Yeah, usually on average our increments are about $5,000. So if someone came in at $450,000, we're saying we will come in at $455,000. So using an escalation clause is basically a safety net which protects our buyers from not having to overpay for a property.
Absolutely, and overpaying, I'm really glad you brought that up, because appraisals are significantly different now, and this is me speaking as an appraiser as well as a listing and a buyer broker. So one of the strategies that we would constantly have to use for our buyers was accounting for not just low appraisals, but just getting our foot in the door and trying to entice sellers by saying that our buyer has cash to account for low appraisal because of all this crazy bidding up of the price that was going on. But that's changed, hasn't it?
It has changed. So when I was doing offers with my buyers, a lot of the times what I would say in an ideal world, we would do dollar for dollar. So if we are going $100,000 over the list price, we are going to account for that with $100,000 in appraisal gap. That is not realistic for most buyers. Most buyers don't have an extra $100,000 on top of their down payment that they can fork up, essentially. So in today's market, we don't have to rely on that low appraisal gap anymore, just because just months ago we had all of these inflated closed sales, and now we have all of these comparable properties that appraisers can use when justifying the sale of this new house.
Yeah, generally you run into appraisal challenges primarily when there's a bidding war, when the price gets bumped up and there just aren't comparable sales that justify that new price point. Whereas now, if we're looking at price drops, now it's very common for sellers to have to drop their price to even get a buyer. Imagine that. And so when that happens, it's much easier for appraisers to find those closed sales that are similar to the subject property to justify that price. So that's another significant difference. And what that means for you as buyers who might be watching is that you no longer have to account necessarily for having another $10,000, $20,000, $50,000 in the bank just to make your offer competitive for sellers. And that's a huge difference. So lastly, time. Would you say that there's a big difference in terms of the rapid amount of time that was needed to make a snap judgment decision on a listing versus perhaps having a little bit more time to think things through and not feel so rushed? Would you say that's a difference?
Yes, that was, I think, one of the most stressful parts for most of my buyers is you go look at a house online or you see a house through Redfin, and if you don't make a decision within minutes, essentially, of going to tour that property, it'll likely be gone that night. Most of the time when houses were being listed, there were review dates. So instead of review on receipt, they would say we would review by X date.
Assuming they honored the date.
Exactly. Those review dates were rarely accurate most of the time if the seller got an enticing enough offer.
Gone next day.
Exactly. It was gone that same day. So if we saw a house and my client liked it, I would say, okay, what are you doing right this second, essentially? And then if, say we tour the house and they like it then, you don't have the time to go home and think about it. You don't have a couple of days to mull things over, check with your finances, talk to your lender about it. You essentially, you're making a decision right then and there. Do you want to offer on it? Because if you wait, it's gone. So now we actually have time to go home and think about things. We have time to talk with our lender about different loan products that would be most beneficial for you and your needs, how much down we want to put, if you want to offer on the house entirely in itself. So you actually have time to breathe.
You can have a life and be a home buyer.
Exactly.
Amazing. So those are some significant differences, and I hope it's really clear that it's not a sky is falling situation. It is different, certainly, and a higher interest rate certainly can mean a higher monthly payment for the same price. But if you flip it around, if you were just a few months ago when interest rates were still below 4%, if you had to bid the price up $50,000, what's that going to do to the monthly payment, right? Whereas if you can get price concessions, if you can get the seller to pay some or all of your closing costs, then you might want to look at the bigger picture. So those are all the things that are different. Let's talk about what's still the same in your experience.
So one of the big things which we always tell our clients is you need to find a good lender. A lot of people are going through their banks and they're finding these online lenders who will pre-approve you essentially in an instant, and that's not going to work still. Sellers still want to see that you have reliable financing and that you can close on time, being the biggest piece of it.
And you also, just for your mental health, want a lender who answers your phone calls and who reliably checks in and is on your schedule versus you being on theirs. That's a pretty significant difference.
Absolutely. Most banks and most credit unions are banker hours, so they're going to work 9 to 5. So if you are going to tour a property at 6 p.m. and you want a pre-approval letter, sorry, you can wait till the next business day. Or if it's a Friday, you can wait till next Monday. So finding a lender who's going to answer their phone, respond to your emails, and answer any questions that you have about the property itself is crucial.
Now, there are still some properties that are competitive. Generally speaking, buyers have a lot more leverage now than they have in the past. But if you see a beautifully remodeled house that's at a very competitive list price and it's the first day on market, it's not like we're going to advise people to be cavalier, right? They should still prepare at least some level of competitiveness that they want, right?
Absolutely, yes. There are still bidding wars that happened. If the house is priced appropriately, you will still have multiple interested parties. So it's not to say that you are only going to be the only buyer who looks at a property. It is just more common.
Still, though, there are amazing differences. So to give you some perspective, I had a listing recently in the entry-level price point. We had maybe 30 showings over the weekend, and this was maybe a month ago, and we received 8 offers, so standard so far. That being said, the most someone bid the price up was $30,000, which, backtrack a few months, it would have been easily $20,000 to $30,000 more than that. And every single one of those offers, all 8, had an inspection contingency. So there are some very important differences even in the most competitive price points.
Exactly. I just won in a bidding war as well where the price was not, there were 5 offers on the table. The price was not escalated very much. We had an inspection contingency. We still had a 4-week close, and we had, it was a conventional loan, but you're not competing against all of these cash buyers anymore as well.
Yeah. And people don't have to bring as much cash to account for low appraisals, like we said, so it's just so much more accessible for people than it has been even recently. So who you work with can be the difference between success or failure. So in your experience, Ashley, not as just someone who's been doing the work, but also someone who's bought and sold homes before, what kind of agent do you think is going to give clients the best success in this market?
So finding an agent that you trust is going to be the biggest key factor. So this is going to be one of the biggest investments of your life. So finding an agent that you can trust with that investment and trust with the emotions that come with making that investment is crucial. So finding an agent who's going to communicate efficiently with you is also pretty crucial in this market. You want someone who on the weekend, if you want to go tour a house, they're going to pick up their phone, and if they can't take you, they're going to make arrangements for you to see that house. So honesty is also incredibly important. There are plenty of times where my buyers send me properties where, sure, on paper it might look good, it might look very pretty, but I want to point out the reasons why it might not fit their needs. Why, if there's a $30,000 roof that needs to be replaced, or if I can see some deferred maintenance that might be a little too intense for what they're looking for. So competency is also another thing that you should look for when hiring an agent. There is not a one-size-fits-all approach to this market, and there are a lot of other things that go into an offer aside from what price you're going to go in at. So finding an agent who can be creative and understand the shifting market is pretty important.
And what I found also is that frankly, it's about volume. You can have years of experience, give or take, in the industry, but if you've only closed maybe 5 transactions or even 10 transactions in the last year, then there's only so much of the market that you can really understand. So having the frequency of transactions that you can see enough situations and also see the shifts in the market, however subtle, that's really going to be important for hiring someone who can really find the best fit for you and find you the best outcomes. I mean, last year, how many transactions did you close, Ashley?
I closed 31 transactions last year, and of those transactions, we had contingent offers, we had FHA loan products, VA loan products. We had a lot of funky different scenarios that we made work.
We sure did. So as you can see, it's not like there's a sky is falling scenario. The market is changing, but with change can come opportunity. Yes, inflation is record high, yes, rates are higher, but that also means that buyers have significantly more leverage now than they did even a few months ago. And if you do end up hiring the right people, whether it's your agent, your lender, your home inspector, you can have fantastic results even in a changed marketplace. So with that being said, regardless of whether you feel this is the right time to buy or even if you just want to wait but get more informed, we are always here to answer your questions and provide you with quality information. Thank you again for watching. This is Anders Ibsen, Managing Broker with Anders Ibsen Homes, and Ashley Mills, Lead Team Agent. Thank you so much for watching. Keep the questions coming.